Well, howdy there, folks. Do we have a lot to get into in this video here today? Oh my gosh, do we have a lot to get into? First off, I love this stock market we are in right now. I gotta say, I am loving it, okay? And I'll explain why. We gotta talk about they're setting up J-POW, and they're setting up the Federal Reserve big time right now. This is something I thought would play out, but it's happening way before I thought it would play out. I thought they were going to pull this trick at kind of like late springtime, early summertime. And we aren't even into springtime yet, and they're already pulling this trick. It's a coordinated attack against Jerome Powell and the Federal Reserve that I'll take you through in this video. And it's going according to plan. That's the way I'll put it. It's going absolutely perfect. The execution couldn't be more flawless. It is literally perfection. So we'll discuss that. Got a lot of stocks to talk about. Got some stocks to share with you guys that I'm looking at buying in this market, and many other various factors. So going to be a busy video. I appreciate everybody joining me as always. Thanks for being subscribed. My foot's still messed up, so still sitting down recording videos. I'm sure it'll be better in the next few days, but it is what it is. And before we get into this, congrats to Patreon member Andy Allen. You are the winner of the complimentary private stock group and private wealth group membership to get all the course curriculums I have, as well as access to the private Discord, the weekly live streams, everything like that. So yeah, congrats to you. And for anybody that didn't know, in the Patreon squad, we do that every single month. We do a drawing, and somebody from the Patreon essentially wins a private group, private wealth group membership every single month. So yeah, if you're looking to join us in there, and by the way, I got new moves coming in the Patreon portfolio within the next 48 hours. So if you're looking to join us, there'll be a pinned comment down there. If you're looking to just apply for my private wealth group and the private stock group in general, get all my courses, all those sorts of things, you can check out the description area. There'll be an application down there, okay? So first off, right off the bat, obviously crude down massively again today. Thank you, baby. Okay, absolutely love it. Can't ask for a more perfect situation. You know, to be going into springtime and see crude at 68, that's great, okay? Because that means essentially like this summer, we're probably looking at, I would say, $85 to $95 crude at peak summer, I would say at this point in time, is likely what we're looking at there. So, you know, that's phenomenal. That's what I'll put that. That is absolutely phenomenal. Obviously, the European markets got destroyed today. We'll talk about that. Commodity index in general got destroyed. That is perfection, okay? Russell down big. Dow Jones down big on about 300 points today. S&P 500 down. NASDAQ, I think I took this screenshot just before the market closed. I believe actually the NASDAQ did end up slightly, I mean very, very slightly green here today, but nonetheless, it was kind of Red Dead Redemption out there. And I woke up from a text message today, okay? And a text message from a friend of mine, and he was actually, you know, saying, oh, market's down big, VIX is spiking huge. And so automatically, that was like the first thing I saw was this specific text message. So right away, I was like, let me check my portfolio, because it must be a huge buying day. And I checked my portfolio, and I was like, what? Like, there's nothing happening. Like, what's going on here? Like, I was expecting to see like devastation in my portfolios, and I was like, no, that's not happening at all. And but there was a lot of devastation out there that happened to certain stocks. It just wasn't happened to be my stocks. Okay, there was a lot of my stocks that, I mean, look at the list of stocks that I had that were green today. Holy smokes, this ain't no jokers, okay? Even these two dogs were green. You know I'm having a good day when those two dogs are green. Holy smokes, okay? Nordstrom's, I think, my biggest investment in the dividend account, or pretty close to my biggest investment. That was very green today, right? SDAL, my hedge, printing money right now. My call options on SDAL are just printing money. It's beautiful. Meta, great day. This is my biggest position in the public account. Another great day for Meta. It's like Meta seems like market goes down, stock goes up. Market goes up, stock goes up. I mean, it's incredible, right? Elf, you know, obviously a significant position for me. Great day here today. Amazon, I was hoping that one actually went down. That one was up here today. Honest was up. Revolve was up. Pfizer was up. WBA was up. I do own a little SH, which is basically another hedge against kind of S&P 500. That was up here today. Corsair was up. Target was up. Foot Locker was up. Texas Roadhouse was up. Palantir was up. It's like, whoa, okay. So I was kind of like, man, where's all this Red Dead Redemption out there, right? And even to take it to a bigger extent, and this is just another reason I love this market right now, there's a lot of stocks that I'm looking to add, you know, shares to, essentially, right? And some of those stocks include Disney, Shopify, Tesla, JP Morgan, all those stocks were down here today. So I was like, oh, that's beautiful. And I have some new stocks that I'm looking at, 3 specifically that I want to add positions in likely the second quarter. And those stocks were all get down here today. Whirlpool, Nike, Intuit, those stocks were all Red Dead Redemption today. And I'm like, this couldn't be pretty much going better. This is about as good as it gets out there in a situation like this. And so I'm like, oh, yes, baby. This is the one I'm really hoping continues to tank. I really want Cake to go down as well. Cheesecake Factory, I'm hoping that baby goes down. I want to add both those as great dividend plays for the long term, okay? And yeah, there was definitely some Red Dead Redemption out there. I have zero exposure to oil and gas stocks, but those stocks got pummeled today. I mean, just look at the moves down. I mean, best case scenario, you were down 4% today, but some of these babies were down 8+% here today. Just absolutely pummeled when it comes to those stocks, right? And these stocks have started to get hit here recently, obviously, especially with oil prices starting to go down and commodities in general. Natural gas is in a bad place right now. You know, do I ever buy some of these oil and gas stocks as some div plays? Maybe second half of the year, maybe first quarter of 2024, something like that. I'm not in a rush to add any of those oil and gas stocks. I think a lot of them have a lot further to fall. I'll be completely honest. So no, none of those interest me. There's a lot better opportunities in this market right now than these sorts of stocks. There could be a moment when those are the great opportunities in the market, but it's not right now, folks. It is not right now in regards to those, okay? Now, this is important. Extremely important for everybody watching this right now. There's still huge fear in the banking system, and I'm going to show you that, okay? And if you look at my banking watch list here today, look at the fear. Deutsche Bank, I love saying Deutsche Bank, down almost 7% here today. Citigroup, 5% plus move. JP Morgan with a shocking almost 5% downward move. That's extremely rare for JP Morgan. Wells Fargo down over 3%. Goldman Sachs 3%. SoFi, that's just another day for SoFi. The regional banking index down. Obviously Bank of America down here today. Why did all this happen? Well, it's because of this, okay? The Swiss National Bank says it will provide Credit Suisse with liquidity if necessary. A statement from Swiss Financial Market Supervisory Authority and the SNB said that Credit Suisse meets the capital and liquidity requirements imposed on systemically important banks, and the central bank will step in if the situation changes. Credit Suisse's stock is under pressure after the disclosure of material weakness in financial reporting, and the bank's biggest backer said it would not provide additional financing. Now, this shocked people. This scared a lot of people in the market, okay? And this is one of the biggest reasons, if not the biggest reason, the market sold off huge today, right? Especially when in regards to certain stocks out there, right? Once again, certain stocks had great days, but the index in general were pretty Red Dead Redemption, right? And a lot of stocks were down. And this caused a lot of fear in the market, a lot of volatility in the market here today, okay? And to that I say, where have people been? Seriously, where's Wall Street been? If they're surprised about anything in regards to Credit Suisse, I'm like, what are you guys even paying attention to, okay? Credit Suisse has been a disaster for the longest time. Like, did people just wake up? 5 years ago, this was an $18 stock. Today, it's a $2 stock. This should come as no surprise that Credit Suisse is not in a good position. The writing has been on the wall for Credit Suisse for the longest flipping flapjack in time. This isn't like an SVB situation where it's like, oh my gosh, what? That all of a sudden went under? Like, Credit Suisse has been a disaster for the longest time. So, you know, that to me just cracked me up in terms of this causing huge volatility out there in the market here today, because I'm just like, this is no news. Absolutely no news. Everybody knows that Credit Suisse is barely making it for the longest time. That's how you get to $2 a share, okay? If you're wondering how do you get to $2 a share, people are very concerned that you're going under, or you're going to cut it close and you're going to barely make it. It's one of the two scenarios, okay? This is completely random. I just thought this was interesting. Fubo stock down here today, but somebody, and it wasn't me, okay? I wasn't the one that was out there buying call options on regards to Fubo. Check out the January 2024 contracts. There was a lot of these that were massively green here today, which means somebody was out there buying Fubo calls for January 2024, despite the stock being down 3% here today. I don't know, just something interesting. And this wasn't the only stock of kind of like the smaller cap stocks that I saw this in relation to this today, of individuals buying some calls that are expiring at the end of this year. So maybe some folks are expecting a lot of these smalls to kind of come back second quarter, third quarter of this year into the fourth quarter, with maybe the market going maybe a little more risk on at that particular time. So I don't know. I just thought that was just interesting. We'll call it that, right? Now, in regards to this market, right, we have a very, very different market than 2022, okay? It is so different, it's not even funny, right? And let me explain it like this, okay? And there's a reason I have this screenshot up here from back in, I think this was either October, November. It might have been November with a screenshot. I spent $77,000, okay? It's very important. 2022 was the year to buy growth stocks. There was growth stocks all over the place. You were catching falling knives, and it's a hard thing for some people to do. For me, I'm like a professional knife catcher, okay? I catch every damn knife out there. You throw me Meta at $100, I'll catch it. You throw me at 120, I'll catch it. You throw me Tesla, you throw me Shopify. You throw me all these stocks, I'm going to catch every knife, and my hands are going to be bloodied by the end of it, but I'm going to catch every damn knife, and it might be a problem, but I like catching the knives, okay? And so, nonetheless, last year, growth stocks. This was where the big opportunity was. And I can tell you, if you were buying growth stocks in the back half of 2022, there's a good probability on many of those stocks you're up 20 to 150% right now. 20% to 150%, depending upon the growth stocks you're buying. The list of stocks I know of that are up at least 50% from where they bottomed out in the back half of 2022 is a long list of stocks now at this point in time, okay? But that's where the real true opportunities were in the market, right? Remember Meta, $88? Remember Tesla, $101? Remember Shopify at $25? Remember Nvidia at $110? You could just go through stocks. Remember AMD at $55? Oh my gosh, the opportunities were insane for those growth-related companies last year, okay? But now, where the real opportunities are in a lot of the value stocks and dividend stocks, okay? And, it's funny because I'm almost starting to be known as more of a dividend investor because of the stocks I've been buying the last few months here. But this is truly where the real opportunities are in this market, right? And I'm going to go wherever the opportunities take me in the market. And so if the market's going to present me with a great deals on growth stocks, the Metas and the Shopifys and the Teslas and all those, I'm going to take those as my advantage, right? Because those stocks are down significantly. On the flip side, if it's going to give me dividend stocks, value stocks for extremely cheap, that's where I'm going to take the opportunity. That's my strategy, GVD. That's what I always teach, right? Building a great portfolio of growth stocks, value stocks, dividend stocks. And when it comes to these dividend stocks, they matter significantly. If you look at the S&P 500 returns over time with, let's say, dividends not reinvested versus dividends reinvested, the difference is in epic proportions, right? And so what I like to do is load up on these dividend stocks when they're heavily discounted. They don't get discounted that often, but 2023 is that year, and we'll go through why they're being discounted so heavily, right? But this is that year where these stocks are great opportunities to add these companies that have stable business models that are going to make money regardless if the economy is good, bad, okay, whatever. And they're going to, most of these companies, the good ones, they up their dividends year in and year out. So you get paid out more and more and more. This year, I don't know how much I'll make from dividends in all my different portfolios. It might be, let's say, $10,000, for example. So what am I going to do with that $10,000? I'm going to reinvest it right back into stocks, right? And so that $10,000 is going to make me a very nice return, right? And then the next year, it just kind of compounds and you kind of build the numbers up bigger and bigger and bigger. And that's the beauty with dividend investing. It's not just about potential capital appreciation in these companies, are good ones, right? But it's about collecting those dividends, reinvesting those dividends, right? And then owning more shares of either dividend stocks or growth stocks, wherever the opportunities are in the market at a particular time. But if you're wondering why these dividend stocks are so heavily discounted, okay, I'll show you exactly why. This right in front of you is exactly why dividend stocks are the great buying opportunity for 2023. At the end of the day, you look at treasuries, right? And these babies are paying the most they have since, like 2004, 2005 time. It's insane, right? When you're a treasury, you're collecting 4+%. So what happened is a lot of people sold out of many of these value stocks and dividend stocks over the last, I'd call it 6 to 9 months, and they've repositioned their money into treasuries in the short term because they're like, I don't have to take risk in the market. The market's scary right now. I don't know what's happening, the economy, blah, blah, blah. And I can put money in a treasury, collect an easy 4 or 5%, and I'll come back to the market, later on this year or in 2024. and rotate that money back over, okay? And so there's a lot of money hiding out in these short-term treasuries, 6-month treasuries, 1-year treasuries, 2-year treasuries that ultimately will flow back to the market. It's just flown out of the market right now, and it presents so many value stocks and dividend stocks for extremely cheap prices. And like I said, I don't think this is ending anytime soon. I think we got at least 3 to 9 months longer to load up on a lot of these great dividend stocks and find great opportunities in the market when it comes to those dividend stocks out there. Because in terms of treasuries, they could continue to come down, but I don't think people are going to move money from a lot of these 1-year or 2-year treasuries until you really get under a 2.5% yield. Once you get under 2.5%, that's when a lot of people are going to say, it's not really worth it to be in these 6-month or 1-year treasuries, whatever. I'm going to rotate my money back to a lot of the dividend stocks and kind of collect those payments and things like that, okay? Now, I've been talking about for a while the coordinated attack that's going to happen against the Fed, okay? And this is something that I really truly thought they wouldn't plan this out and do this until late springtime or summertime, but they're ahead of schedule and they're going for the jugular right now, okay? And so one component of this is you need politicians to start speaking up and making very loud noises against Jerome Powell and the Fed to get them to back off, essentially, okay? And that's exactly what Elizabeth Warren's doing right now. Elizabeth Warren, who's obviously a very big voice, one of the biggest voices actually for any politician in the world, to be quite honest. Like when Elizabeth Warren speaks, it makes headlines. Elizabeth Warren urges Fed's Powell to step back, rescue himself from the SVB review. Senator Warren rips Powell on the bank run response. Dangerous to have him in charge. She's calling Jerome Powell dangerous now. So political pressure starting to brew against the Fed and Jerome Powell. That's one component you need. The next component you need is you need the market to start downtrending, right? This is just since the beginning of February. S&P 500 is down about 7 percentage points since the beginning of February. That's a pretty significant move, folks. A pretty significant move. And that goes to show you that Wall Street's in on kind of this game plan of, because you need, in order to get the Fed to back off and to stop, you need a coordinated attack that comes from several different angles. You can't just have one angle. You can't just have Elizabeth Warren say something, but the market's doing something else. You need it all simultaneously to happen. So you get the market going down. You get politicians starting to come out against him. On top of that, what's the closest thing to the Federal Reserve? The closest thing to the Federal Reserve is the banking system. So if you want to talk about really hitting him hard and the Fed hard, tank the banking stocks. Tank these babies. You tank these babies and you start causing mass fear. When mass fear starts creeping in the banking system, the Fed has to act on that, okay? And so if you look at the regional bank, this is a 1 month of the regional banking ETF. It's down almost 30% in one flippin' flapjackin' month. 1 month, folks. That's insanity. I don't even know if we saw that sort of 1 month move for the regional banks in the great financial crisis, to think about it. That's shocking, absolutely shocking to see in a 1 month, that baby down about 30%. Insanity, right? And so the Fed's like, oh crap, the S&P 500's down, got politicians coming against us, we got regional banks, and then the last component is add embarrassment and add shame. And that's exactly what this SVB situation did. It added embarrassment to the Fed, that they didn't see that coming. The 16th largest financial institution, they didn't see that coming. It's embarrassing for them to see that baby just go under out of nowhere. And like, people are like, where were you guys at, right? Never mind, obviously, Silvergate, Signature, those babies went down. But the SVB one is absolutely astonishingly embarrassing and shameful for the Fed to have had that happen on their watch and not have like been prepped for that. It shows like, oh my gosh, like what are you guys even doing? And so this is like a coordinated, planned out thing here, right? In terms of a bank run, because you could technically cause a bank run on anything. By the way, if you were confused about that, you can cause a bank run on anything. You cause a bank run on Flip and Flapjack and JP Morgan if you want it, Wells Fargo, Bank of America. If everybody decided to all take their money out tomorrow, they're out. Like you could take down any bank in a bank run situation. Let's be clear about that, okay? That's not like this is like an impossible thing to do. That can happen in literally any single bank. And so a situation like that, it definitely feels planned, coordinated, and there has to be some casualties as there does in war, right? But it's for the greater good, as they say, right? We who are about to die salute you. Isn't that what the Romans said, right? And so nonetheless, it is so perfectly coordinated. It's like a masterpiece. And so here we are next week with the next FOMC meeting, right? And how are they going to raise rates? You know what I mean? Like, could they? I guess. But I'm just telling you, like, they're going to have to back off. They're going to have to back off. If they do decide to raise rates, it's likely only going to be 25 basis points. And honestly, like, I don't even know if they're going to raise 25 basis points. I think there's actually a decent probability they don't raise it all now at this point in time, okay? And that's not it in regards to the situation, right? And the great thing for the Fed is they have also an easy out here, because now with CPI, 70% of the increase is coming from housing. Housing is going down regardless of what the Fed does for the rest of this year. Like, housing is going to keep going down. There's no one's there to save housing, I can tell you that, regardless of what happens to rates in the short term. Housing prices are going to continue to fall. Rents are not going to increase nearly what they were. I showed you guys this in yesterday's video, right? You got rental properties piling up across the United States. Pull up on Zillow, your city. Pull up other cities. You're going to see rental properties are flooding the market now at this point in time. So in terms of rent increases for the rest of this year, in terms of thinking housing is going to boom again, it's not happening anytime soon, baby. That's not happening anytime soon. There's nothing fundamental that's going to push any of that up. The amount of homes for sale, inventory-wise, is piling up in almost every single city and state across the United States right now. And so nonetheless, this is all going to produce a housing situation that's very weak for at least the next year. And so housing's been 70% of the increase, and now it's not even going to be an issue, regardless of what they do. So that's kind of an easy out for them, right? You tack on top of that, commodities in general continue to come down. This was a huge component that's not talked about nearly enough of why we had sky-high inflation. Commodities went from, the commodity index was what, $9? And that baby went to $26+ at the peak. And that was in a matter of what, 2 years? I mean, that's insanity. That's insanity, right? Completely unsustainable, not realistic, right? But commodities are falling back in line with where they should be now at this point in time. So the Fed doesn't have to really worry about housing. That will fix itself over this next 6 to 12 months. And they don't really have to worry about commodities now at this point in time. And so nonetheless, that puts the Fed in a pretty powerful position to make the decision that they're being basically forced into and backed into a corner in regards to this situation. But it goes deeper than that. It goes deeper than just like raising rates, cutting rates, stopping raising rates, those sorts of things, okay? The other component to this is quantitative tightening. Quantitative tightening is basically the opposite of quantitative easing that they've been doing for a long, long time, okay? And quantitative tightening is essentially them shrinking the balance sheet for the Fed, right? And they went from about almost $9 trillion balance sheet to right now they're 8.3, so they've cut it by about $600 to $700 billion so far, okay? I think there's a good probability they're either going to slow or completely stop quantitative tightening this spring, okay? I think there's a high probability, extremely high probability of that. And they'll probably just keep things roughly flattish unless the banking system was to get much worse and they could actually start growing the balance sheet again, right? And just keep in mind, when it comes to the Fed's balance sheet, this baby is never going to go down substantially. Like, it's always going to be in a very elevated manner. And every few years, it's going to hit a new record. And then they'll slow it and maybe cut it down a little bit. And then there's going to be a new record hit. So that's the way that works. So anybody that's hoping like the Fed balance sheet ever gets down to some unrealistic number, like that baby's always going to grow over the long term. It can shrink for a few months, it can shrink for maybe a few years, but at the end of the day, the trajectory of the Fed's balance sheet will be bigger and bigger and bigger directionally over the coming years, right? Now, think about this for a moment, right? We had the lowest consumer sentiment that we've ever seen for the Michigan consumer sentiment that goes back all the way to the 1950s, okay? To the 1950s, the lowest, okay? This is how bad things got, and this is why I call 2022 actually a really bad recession every year, because you had almost every single element of recession other than unemployment in there. But the elements you had in there were much worse, and this is why consumer confidence was the lowest we've ever seen in history. Think about this. We went lower than after they had 10 years of inflation plus a recession on top of that. We went lower with confidence than the great financial crisis when unemployment spiked to 10+%. We went lower in consumer confidence than in Rona, when they were shutting down the worldwide economy. Think about that for a moment and let that set in, okay? And that just goes to show you it gets no worse than that. Like, regardless of what happens, it gets literally no worse than that. That's incredible how bad things really got in 2022. And I don't think a lot of people really take into account like how severe the recession of 2022 was. It will never be called a recession, and I think because of whatever reason. I don't even get into that. It just frustrates me, okay? But you saw the biggest companies in the world have trouble growing, right? Companies that consistently grew their revenues, 15, 20, 25%, have trouble growing in 2022, right? You saw consumer confidence go to the lowest we've seen in the history of the United States of America. That's insanity, pure insanity. But they'll never call it what it was. And so at the end of the day, I'm looking out and I'm actually seeing a brighter picture moving forward. Just because we didn't have high unemployment doesn't mean people weren't devastated last year. They were devastated way worse last year than the great financial crisis. Ask people. Were they more devastated last year than the great financial crisis? And what most people are going to tell you? Yes, they were. That's why that survey went so dang negative. It was incredible, man. Absolutely incredible. Way worse than Rona. It made Rona look like a joke in terms of how confident people were. They were not confident whatsoever, okay? Whatsoever. So, there's a picture from me at the beach back in January, right? And I'll probably take a nice trip at the beginning of every year moving forward. And just kind of was looking at the water, and I just had a lot of time to reflect and just, think about kind of 2022, how tough of a year it was, all the stocks that went down massively, all the knives I caught, right, as the year went on, and it was vicious, right? And, you're buying those stocks, and you're buying those stocks, and you're buying out of optimism for the long term, right? But, I mean, it's tough when you're buying stocks and it goes down more, and you're buying a stock and it goes down more, and you're buying stocks and it goes down more, right? And you're looking and you're like, gosh, I keep buying these stocks and they just keep going lower and lower and lower, right? And you're like, when does it end? When does this game end? Like, when do these babies finally bottom out and go up, right? And so I was just kind of reflecting on how tough of a year it was last year, right? And it was probably a much tougher year for me in 2022 than it was for a lot of other people, right? Because if you were in oil and gas stocks, it might have actually been a pretty good year for you in 2022, right? If you were positioned, at least in the first half of 2022, not in growth stocks, but you were in more value stocks, dividend stocks, it was a good year, right? Because those ones really didn't start to fall until the second half of the year. And so, nonetheless, it was a very, very extremely tough year for me. It was the toughest year I've ever had in my investing career last year. It was the toughest. I never had a year that tough. 2015 definitely up there, but 2015 I was doing short-term trading and all types of crazy crap, okay, and margining out and doing all types of wild stuff. 2022 was the toughest year for me as an investor in the market because it was brutal. My stocks were getting obliterated. I was buying stocks and then they go lower, and then I'd buy stocks and then next day it's 5% lower and 10% lower, and it's like, geez, like when do these babies bottom, right? You look at some of these stocks. Meta went from $300+ to $88. Tesla went from 400 to 100. You know what I mean? Like, you just look at those stocks and the falls. I mean, the amount of those great companies that fell 60, 70, 80%. We hadn't seen something like that other than the great financial crisis and after the tech bubble. That's only two time periods in the past 30, 40, 50 years that we had seen a move like that. It was insanity, right? And so, on that trip, I was just doing a lot of reflecting of the grind that I kind of went through in that situation. That was brutal. It was absolutely brutal, right? And so, for other folks, some folks, if they're not positioned properly in this market, they're going to have one of those years for themselves, right? And you're looking at some of these stocks, a lot of the banking stocks that held up pretty darn well for much of 2022. If you're positioned in a lot of those banking stocks, oil and gas stocks, 2023 is a brutal year for you. It's what for those folks that had a good 2022 and me having a bad year, it's like we switched positions. And now I'm having a great year, right? Like since the beginning of the year, despite all this turmoil in the market, is that the word turmoil in the market, right? And all the drama and everything like that, I'm up hundreds and hundreds and hundreds and hundreds of thousands of dollars right now, just from where I started the year. Well, the market hasn't done a thing, really. And while all this drama has been going on and you got all these other stocks collapsing, but I already got slapped 50 times last year. So, it is what it is, right? And I just look at it and I'm just like, oh, I love this positioning I'm in right now. I love the positions I'm in. I love the positions I want to add over this next 6 to 12 months. And I just love kind of where the market's at. I'm kind of hoping it goes down more short term on the whole drama fears and everything like that. But I actually don't think that's that realistic. I think actually there's a pretty decent probability that the market will go up quite substantially over the next 6 to 12 months. But my hope is it goes down. So there's kind of like a divergence between what I think is going to actually happen and what I want to happen. What I want to happen is the NASDAQ to stay low, S&P 500 to continue to go down in the short term. At least when I talk about short term, for me, it's 6 to 12 months. For somebody else, that might be a long-term perspective. But for me, that's what I want. I don't actually see that happening. I actually think a lot of companies are going to come in with way better earnings as this year goes along. I think the Fed's going to move to the other side. I think the chances we get massive unemployment, not very high now at this point in time. Consumer confidence is improving rapidly. As long as we keep inflation continue to come down, people's wages will catch up and people will feel a lot more confident going into next year. And that's very important with elections coming around the cycle here. The politicians that are in office, they need that. Because if they don't get that, they're going to be voted out. And so nonetheless, those folks are very desperate for that situation to happen. Otherwise, they don't even have a chance in that next baby, okay? People have a pretty short-term memory. They remember really what's been going on in their life over the last 6 months or so. Like, this world's a world of what have you done for me lately, right? And if you've done great things for somebody lately, they remember that. If you haven't, they remember that. And so what have you done for me lately? And so whatever's been going on in 2022, 2023 with, consumers feeling the worst they ever felt. If all of a sudden in 2024 they're feeling pretty good, it will change even potential who wins certain elections and who doesn't. That's the way it works. So anyways, guys, appreciate you joining me as always. Much love. Thanks for being here. Also, make sure you join us in the Patreon. I got new moves coming up in the Patreon portfolio within the next 48 hours. And if you're looking to apply to join my private wealth group, private stock group, learn directly from me, the application will be in the description area. And have a great day.